If you're a new mortgage broker in this industry, there's a question that you're going to get asked, probably way more than once. And most new brokers fumble around with it badly when it comes up. And that question is this: why should I use you when I could use Habito or Mojo to get a mortgage in principle in minutes? Okay. And the reason most new brokers fumble is not because they don't know the answer, it's because they've never been given a clear, confident framework for what the actual answer is. So they either undersell themselves, says, oh yes, they're great platforms, but I can help you too, or they overclaim those platforms aren't as good as a real broker without being able to explain why. And neither one of those answers, by the way, builds confidence. And in this industry, your ability to explain your value clearly is directly connected to how much of it you get paid for. So this is the fix that you're going to learn right now. So by the end of this video, you're going to understand exactly what a digital mortgage platform like Habito and Mojo do well, who they are genuinely built for, and most importantly, by the way, where they stop and where you start. You'll have a clear, honest framework for explaining your value to a client who asks that question without dismissing the competition or underselling yourself. Now, this is not about being threatened by these platforms. It's about understanding the landscape you're operating in so that you can position yourself confidently inside it. First, let's be fair, because fairness is what builds credibility. Habito and Mojo and platforms like them are genuinely well-built products, okay? They use automation to cross-reference a client's details against lender criteria in real time, surface suitable products, and in the right circumstances deliver a mortgage in principle in minutes. That speed is real. It's not a marketing exaggeration. For the right client, it actually works. And they're whole of market, they're FCA regulated, and for the straightforward cases, they deliver an outcome that's functionally similar to what is a traditional mortgage broker would actually deliver, just faster and with less human contact. If a client asks whether these platforms are legitimate, the honest answer is yes. For certain situations, they absolutely are. Say that. Clients respect honesty far more than defensiveness. And the brokers who try to dismiss the competition without substance lose credibility very, very fast. See, the question is not whether these platforms work, it's about when they work. And that's where your value becomes very clear. You see, these platforms are built for one specific type of client. PAYE, employment, clean, consistent income, no complications on payslips, clean credit history, no mispayments, no defaults, nothing in the background that needs a conversation. A standard residential property that a high street lender would accept without conditions, and a straightforward deposit that's clearly sourced and properly documented. If a client fits that exact profile exactly, and some of yours will, by the way, a digital flat platform is genuinely a viable option for them if they want to go that way. Now, I want you to be honest enough to know that, because it actually is going to help you. When you understand precisely who these platforms serve well, you stop trying to compete with them for those clients and you start focusing your energy on the clients they can't handle. And here's the big thing with this: the clients they can't handle are more interesting cases, they're more valuable ones, and they're the ones where your skill and judgment actually matter. This is the part I want you to understand deeply, because it is the foundation of your professional values. Self-employed clients, this is the most common area where digital platforms struggle a lot. A sole trader, a limited company director, somebody with multiple income streams that doesn't show up cleanly on a payslip. The automation has a hard time assessing that accurately, and lender criteria for self-employed applicants varies enormously and changes regularly, and they often requires somebody who understands how to read a set of accounts and present the income in a way that's specific to the lender's needs to see it. That is your job. That's the judgment work. You cannot automate judgment. Adverse credit, a historic default that's been satisfied, a missed payment from a few years ago, a CCJ that's old and has been settled. These are not automatic declines with the right lenders, but finding that right lender, packaging the case properly, and making sure that it doesn't get auto-rejected before a human has even the chance to look at it requires a broker who knows the specialist market. Platforms are generally not built for that navigation, but you are as an advisor. Complex income, contractors, people with variable bonuses, clients with rental income alongside employment income, someone whose income has changed significantly in the last 2 years. The difference between a client getting a mortgage that they actually need and being declined can come down entirely to how the income is presented and which lender's criteria it matches to. And that's not a form-filling skill, that's an advice skill. And then there's what happens when something goes wrong mid-process: a down valuation, a lender query, a change in circumstances between application and offer. When a digital platform hits something the automation wasn't built for, the human support available in these companies is very limited. It's slower to reach, less empowered to make decisions, and not in a position to advocate meaningfully with the lender on the client's behalf. But you are. And that's the difference. See, I want to spend a moment on this because I think new brokers often underestimate how much it matters, which is when a lender pushes back on a case, queries something, asks for more information, sits on a decision longer than they should do. What happens next is not a documentation problem. It is a relationship and a communication problem. A broker who knows that lender, who understands what the underwriter needs to see, who can pick up the phone and make a clear, informed case for their client, that broker gets the decision that a platform support desk simply just cannot get. That advocacy is invisible to the client when everything goes smoothly, but it becomes everything when something doesn't actually go smoothly. The clients who experience it, who see their broker fight for them when the case gets complicated, those clients don't go anywhere else ever. So you want to build that skill deliberately. Get to know your BDMs, understand how your lenders think, build relationships before you need them, because the day you do need them is the day you need to make that call on behalf of a client. It is not the day to be introducing yourself for the first time. So when a client asks you, why should I use you instead of Habito? Here's the framework. You acknowledge the platform. Honestly, Habito and Mojo are good platforms for a straightforward case, standard employment, clean credit. They can be quick and efficient. Then you ask the one question, can I ask you, are you employed with a regular salary, or is your income a bit more varied? See, most of the time, the answer to that question reveals a reason why their case isn't as straightforward as they assumed. Self-employment, a gap in employment, a credit blip they'd forgotten about, a deposit with slightly complicated sources. And that's when you say, that's exactly where having somebody in your corner makes a very real difference, because how that gets presented to a lender will directly affect the outcome you receive. So you haven't dismissed the competition. You haven't oversold yourself. What you've done is you've asked one question that lets the client's own situation make the case for you. And that's confidence, that's honest selling, and it works because it's true. But here's what this means practically for where you invest your energy early on. Don't try to win the simple cases by competing on speed. You will not beat a platform at that game. You'll exhaust yourself trying to. Instead, get comfortable with complexity early. Learn self-employed criteria across all of the key lenders. Understand how adverse credit cases work. Know which lenders are flexible on income and which aren't. Build the knowledge that platforms cannot replicate, because that knowledge is your long-term competitive advantage. And for every client you work with, straightforward or complex, deliver an experience so far above what a platform offers that the competition becomes irrelevant. Clear communication, proactive updates, proper follow-up, genuine care about the outcome. You see, a client who felt looked after that doesn't think next time should they use you or should they use an app. They already know the answer. See, digital platforms are a real part of the mortgage landscape now. They're not going away, and they're not the enemy as well. For simple cases, they work well. The market is big enough, and there's more than enough complexity left over for the brokers who know what they're actually doing. Your job is to understand the difference, position yourself honestly, and build the skills that technology cannot replace. Do that, and the Habito question stops being a threat, and it starts being the easiest objection you're ever going to handle.